Welcome to Local Business Spotlight, everyone. I'm Troy Thompson. I'm joined by Morgan Hill from Hill & Hill Financials, and today we're talking all about, that's right, everyone, it's that time of the year when it comes to taxes.
Yeah.
Welcome to the show, my
Always
friend.
a pleasure, Troy. Good
nice
to see you.
Nice to see you again. I wanted to talk about the difference between tax preparation and tax planning.
Yeah,
I
good
thought it was
question.
the same. I know that might sound stupid.
No, it's an excellent question because most folks, first of all, when I've joked with people, I think in pictures, it's a blessing and a curse. When most people think about taxes, first of all, they think of it as a rhinoceros. Usually there's this big horn coming at you, right? Taxes. I said, you really want to think of it more like a porcupine. There are lots of little needles that can come at you. There are different types of taxes that can hit you at different times. There's ordinary, interest income, inheritance tax, estate tax, generational passing of wealth. Because of that, you really have to know the difference between planning and prepping. Now, our firm works with a wonderful team of CPAs. Folks who are watching may be using TaxSlayer, TurboTax, H&R. Those are wonderful tools, but fundamentally, preparation is we take the 95% of the stuff that we did last year, we give it to either the TaxSlayer or the Turbo or our CPA, put it in the boxes, take in that extra 5% and make sure that the back of the 1040, if it says O, it's little, if it says refund, it's big. Very important, and I love the people who do it for me. Now, tax planning goes far deeper, and we actually do a lot of tax planning, have tax planning tools and systems.
Should we be doing that all year?
My personal belief is yes, especially when folks are getting into retirement, because tax planning gets at, should you be giving charitably from your IRA to avoid extraordinary income tax? What about Roth conversion? Should you take this IRA that you've built up for years and maybe convert it so it's tax-free in retirement? How does life insurance perhaps use to help pay taxes if you're going to generationally pass wealth to the next, to the kids or the grandkids? This is where planning comes in, and your required minimum distributions, those IRAs and 401ks. I work with some wonderful tax professionals. They have told me specifically, Morgan, there's so many pages in the tax code. We work with this big bulk to do the preparation, but a lot of these are in sections of the code that we just don't interact with, and most folks think, I went to this person, I'm assuming I'm getting all of it, and you're not. That's why we stay very busy to work with the CPA, so it's a complement. They're helping with the preparation, we're helping with the planning.
I got you.
Yeah,
I want
very
to ask
important.
you this question. In light of the Secures Act of 2020 and the possibility of a Secure 2.0, what tax planning strategies should an audience be aware of, especially when it comes to 2022? And how do we know about all these acts? Is that the accountant's job? Is that your job?
No, it's actually mine. I do a lot of education in these areas, and I keep up with groups out of Washington with what's going on in Congress and whatnot. One of the things that I think is critically important when I look at the Secure Act, setting every community up for retirement enhancement, sounds wonderful, very benign. What I've discovered, and I'm not anti-anything, I'm simply sharing that usually when it comes to taxation, it's almost like a David Copperfield magic show. They talk about misdirection. Wherever the trick you think it's over here, what's happening is really over here.
Right.
The issue that I see with the Secure Act is it sounds very good and there's wonderful things for certain groups of people, and I'm finding that the children, the generational passing of wealth, the tax bills building up for them. It went from age 70 and a half to get your mandatory distributions to 72. Well, how wonderful, Troy. Look how nice we're being. They shortened the generational passing of wealth from approximately, I've heard, somewhere around 80 years to 10.
Really?
2.0, they're already saying 75 is the new age. I'm very concerned that they're going to shorten what happens to the children, and most people want to make sure the kids get more than the federal government.
Here's the thing, we just got to stay on top of things, right?
You betcha, you betcha.
Morgan, always great information.
Yeah,
Thank you so
much for being here.
Thanks for being here, we really appreciate it. If you want to find out more information, there it all is up on the screen for you, Hill & Hill Financials.